It looks like so far, Trump is proposing some radical ideas, and it's just hard to see how the market's going to digest that.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we are continuing our coverage in 2025 of the gold and silver markets. And today I'm quite excited because we have a new guest to the show, although some of you may have heard of Drew Rathberger before because he's done some great interviews on Tom Broderick's Palisade Gold Radio and fortunately has quite a bit of experience in gold and silver and is going to go inside some of the things to watch out for, some of the shenanigans out there, but also talk about the markets. He's been actively trading for over 20 years in gold and silver, which not the easiest life path to take there, Drew, but looking forward to hearing more about it and great to have you here today. So how's everything going with you, my friend?
Going well, Chris. Thanks for having me on your show. And as you said, Tom had me on as well, and just trying to get some information out and be interviewed by guys like you and give some market insights of what to expect in this year, 25, under the Trump presidency, and where we kind of see the metals going. And I don't know if you have kind of any thoughts on that since we January 20th is coming quick on us.
I have
And
many. I have many.
it's going to be an interesting year nonetheless. But I don't know if we spoke a little bit about it earlier, but what's your kind of take going on for this year with the metals?
Well, I wonder if we won't have a different theme to the first half of 2025 of what people think is going to happen. And then maybe when some of these policies start to be more real and it's like, oh, they're going to do that, that actually might affect this. So as that sinks in, I think we may have a different tone to the second half of the year. And we can dig more into that. Although Drew, perhaps just to get started, could you just let people know a little bit about your background so they can have the context of some of the experience you have? And without putting you on the spot, you did tell me the meaning of your last name before we started, and I'd love it if you would share that as well just to
Sure.
kick things
A
off.
lot of people, a lot of people can't say my last name, but it's German. Rathgeber is the how you say it, and I guess in America, but it actually means wise man, giver of advice, which I have always found interesting and kind of funny based on my career choice. I started in 2003, and here I am, 2025. I can't believe I've been in this business that long, but still trading metals daily and now the owner of my own trading firm, my own precious metals trading firm. So it's been a long path, but I'm here, and that's basically how you say my last name and what it means.
Well, that sounds perfect, Drew, because I think just about everyone in the gold and silver industry is ready for the giver of wise advice. And let's pull up a quick look at some pricing. We're recording on Tuesday. Most people watching this, it'll probably be Wednesday for you, but big year in 2024. It's now in the books. And at least in my opinion, I guess you have 1980, 2011. I'd been leaving out 2020, which percentage wise may have been a bigger move, but certainly quite a year it was, and leaves us at 2666 on a Tuesday morning. And we have silver back over $30. So anything that you learned from last year, especially as you've been trading it actively, and what you are seeing heading into 2025?
Yeah, interesting. My last year, I made a projection. I think gold was in the 1900 range or thereabouts. Made a projection of 2400. It blew right past that. We've got over 2800 on gold. A lot of geopolitical. However, the narrative was pretty easily kind of predictable. You still had a fourth year Biden term, so you knew deficit spending was going to be continuing down its path, and inflation was going to be also a prime factor. And I've been doing this so long. I've always said if you can get a 30% year or 30% plus year, that generally speaking is a pretty decent. In the last 20 years, that's a good year in the metals arena. As we all know, it can cool off and go -5% or up 5% and cool off from that level. So that's why I'm a little bit more skeptical going into the Trump administration. I did write a blog post and just said, I expect it to continue in one aspect, but if they really ratchet down Doji and reduce deficit spending, that could have a negative impact. So there's a lot to be seen. It's a harder year for me to put my finger on. And I'm just being honest. It's a much more difficult year to put my finger on because, it looks like so far Trump is proposing some radical ideas, and it's just hard to see how the market's going to digest that.
I know exactly what you mean in the sense that we've sat here in the gold community and silver community as well for decades, some of us, and
Yep.
talk about, well, they're going to kick the can down the road. At least with what they are continuing to advertise they plan to do, that's changing how much road they have left, in my
Yep.
opinion. And something you mentioned in there is something we've discussed, and I've been thinking about a lot. Would love to hear more about that. You said that if Doge comes in and cuts spending, that conceivably you get a lower deficit. Although I guess the counter to that is that with 23% of GDP coming from government expenditure. I mean, if they're laying off government workers who aren't spending money, I don't know if they're planning to cut porculus uh, projects that they hire out and outsource and pay for. But if they're not paying those companies anymore, that's GDP that's not being made, tax money that's not being paid. So do you end if you actually had those cuts, if there is a substantial amount of cutting, really the question is, does your deficit get bigger or smaller? And any thoughts on how that might ultimately
Well,
play out?
that's a $1 million question, and I've actually got some pretty big concerns. And that also comes down to I remember Elon mentioning universal basic income, and will there be jobs for those government workers now with artificial intelligence coming about? So what are we going to do with all those people that we push out off the? And he did mention that they're going to do like a 2-year severance package for these guys, so they'd have plenty of time to kind of relocate. But what is the implications of all of this, all these things coming together right now? And it's tough to gauge, but there's just a lot of variables that really have me questioning a lot of things, to be quite honest with you. And that is pushing all these government workers back into the private sector. We've been through this before in this country where they push and pull, and it should have been done probably 10 years ago. But that brain power needs to be pushed back out the private sector. But how is that brain power going to be productive in supplementing the tax base? That's the big question.
Yeah, it certainly is, and that's why I agree. We're going to have some volatility in that first half of the year. Now, it's interesting as you were saying that you're talking about, well, a transition and how do we redeploy these people, and it has popped into my mind. At least if there's someone who's going to be involved in running that process. I know there are some different views on Elon, although someone at least that he came into Twitter, it seems like reduced the workforce, the thing's still running. So at least as opposed to some bureaucrat. So at
Yes.
least someone that could conceivably, and this is what we've always talked about from an Austrian economics perspective, that you're changing the labor. We don't need people doing more government, dig up a hole, fill it back in. So I think that if there is a plan, similarly, I'm a big fan of Luke Groman, who talks about you can do this. You can bring things back on shore, but you have to accept that the inflation's coming and do a devaluation first. And if these things are all coordinated, you could start to reallocate the way resources are used. Whether that happens, we'll see. But that's, I guess, why I see maybe the first half of 2025, we start getting more information about that. And perhaps towards the second half,
Yeah.
find out, well, this is how that's actually going to play out. And with all of that said, any thoughts on how you see the metals responding through all of that this year?
Yeah, like right now, I'm actually pretty surprised at this moment in time. The dollar has been on an absolute tear,
Oh,
and the
yeah.
metals have been holding up. The metals surprisingly have been holding up quite well, which is pretty bullish sentiment from my perspective. And like you just said, if we have those inflationary pressures come back and we have these radical changes, and let's say hypothetically inflation comes roaring back, which I think the market is kind of anticipating, and that's why the bonds have dropped so much. I think the market is. Uh, oh, are you there?
Yep, yep.
Oh,
I'm
okay.
just pulling up the chart. There's our dollar chart, which
Yep, there's a dollar chart, but I think the market is kind of anticipating some inflationary pressures, just based on the way the bond market's been reacting as of late, and kind of decoupling from the norm.
little jump in yields, huh?
Yes. So I think that is sending us a signal. Those yields are definitely sending an inflationary, which is bullish for the metals. So we'll have to see how that all plays out. But there's definitely some decoupling going on within some of our indicators that we follow. So,
Yeah, it's been stunning. I mean, in the same time, and I mean, it's almost to the day. Here we are. There's the 18th of September when the Fed started with the 50 basis point cut. So I mean,
yep,
this is a big move. And we're almost 100 basis points, so pretty
yep,
close. And that's not just that it went up 100 basis points, but while the Fed's lowering rates 100
yep,
basis points, and I think what you mentioned a very valid concern. People are wondering about inflation, which is already accelerating. And I would suggest before the impact of the cuts he's made has fully been priced in. So,
yep,
where does that leave you? And then the same thing with the dollar, where we were just under par back when the cuts began. Drew, we crossed over 109 last Thursday. So that means while the Fed was cutting rates 100 basis points, and we're about to embark on these policies that, on one hand, I think are necessary. On the other hand, they're going to be painful if they're done now. Yet the dollar has rallied over 9% throughout all of that. And like you said, the metals, I get it. People would want gold and silver prices higher when you're getting 100 basis points of cuts. Yet, to the degree that the dollar index was up, all right, now 8%, but 9% at one point, that the metals, I think gold is up a little bit, or no, silver is up a little bit. Gold is more flat over that time period yet.
yeah. It goes a little flat. I mean, it's come off its the 2800 area, and it's actually kind of sitting on a interesting spot where could push. I mean, my short term indicators are kind of a little bit bearish right now, even though we had a big pop and it kind of came back and did an intraday or not, an intraday pop, but short term a little bit bearish. But will be interesting to see kind of where we get. I mean, my long term indicators are all very bullish. But just short term is a little bit bearish, but long term indicators are very bullish still in the metal. So, I've even been trading platinum and palladium. So I want to bring that up because I don't think that's getting enough attention right now. But take a look at platinum and palladium as well. Platinum used to be the leader for us 15 years ago, and it's about half the price or less than half the price of gold these days. So if you're bargain shopping, you could take a look at platinum as well.
Yes, and we do have one particularly large platinum fan in our audience. So Neil, I hope you're excited to hear that. Drew, although one more question about the
Sure.
dollar, and then maybe we'll dig into some of the things that go on in the industry that people might not know about that
Okay.
you could shed light on. I've been wondering, here we are, here's the dollar index. Back in 2014, you're below 80, then it's rising, and we get to here in 2016. So this is leading to the last Trump election. And in June, it is around 95, starts accelerating, gets up to 103 in late 2016. So similar, we had the dollar rallying as Trump's coming in. And I think people remember that. What gets a little less attention is that by the end of 2017, we were below 90. And I would say that interesting because it's not exactly the same situation, but when you add on the differences this time, I would suggest it would fit that pattern that you might have a higher than normal chance of a repeat of something like that. Is that a
Yep.
reasonable way to look at that, or what would you say there?
You could, but I will say one concerns is I think the first presidency for Trump was a trial run, and I think things could be pretty different this time now that he knows how DC operates and works. You could still see the dollar go to 120. I mean, I remember when it was at 126, and I remember when the dollar index was below 60 during my career. So, anything's at play here. You could easily see this a repeat, but at the same time, I'm definitely watching closely on the policies that come out of Trump's administration. So,
Well, that makes sense, and yeah, it'll be fun to see what this looks like 6 months from now. And
yes,
Drew, as people are digesting that, and I know there's a wide range of views on Trump, although I'm excited. At least let's get here, find out what happens, and only a couple weeks away.
yep.
So while people are trying to unravel everything that's going on there, anything that you could share from your experience inside the industry that might be useful to people that whether they're veterans or new to it, that you could pass along?
Yeah, I mean, I started pro. I'll just start with, I came from the spot market, and I think that one of the biggest things that's not talked about beyond market direction, market information, and I think we all can go on the internet and look up every different, newsletter writer out there. But I started ProGoldTrader.com addressing a major problem I see in the precious metals community. And this is those spot storage accounts, particularly they're targeting Roth and IRA funds with outsized spreads. And I came from that side of the industry 20 plus years ago, and I wrote a book called Inside the Beast, Pro Gold Trader, and it's actually on Amazon.com now. And I'm just trying to address and educate the general public on the instrument that you trade, not so much even direction, but the instrument that you trade can make or break you more than the direction. And I'm really trying to get people to wake up. And even the ETFs and these closed-end funds, they're good in one aspect, but not so great in others. So I wrote this book really trying to wake people up that you can be right in market direction, but if you're not trading and using the correct instrument, that will make or break you in this game of precious metals. And that's whether that's delivery take home, a futures, ETF, closed end funds. It just depends. So I wrote this book and I hope people purchase it because it will give them insight of exactly kind of how this stuff works.
Yeah, certainly an important topic. And Drew, anything you could share today of things, I'm thinking back to Silver Squeeze when people jump in and get excited about something quickly. And right when you have any situation like that is when you can end up in not the best products or solutions
Hmm.
you're doing. Any general tips or advice for
Yeah, I
people of
mean,
things they'd want to be aware of?
the industry, as far as precious metals is concerned, is driven by two factors: fear and greed. Every spot dealer knows it. They're going to pump out fear articles after fear article, and I actually put all the different calamities we've had since 2020 in that book. Um, but just sit back and start, for the general public to sit back and become a little bit more objective about this and really research the proper instrument to trade and remove that fear and greed factor. The goal is to either preserve, protect, or profit. And I think that quite often the nuances of particularly, and even for myself, I mean, I'm on Twitter, I'm reading the same stuff you guys do. My brain I'm a little bit of a conspiracy tin hat guy. And be careful on social media because a lot of stuff is true, but not true. Let's just put it that way. And it's very easy to get persuaded. And I fight it myself. I'm on there, I'm on the reading all the different accounts, and just to kind of step back and just really breathe and realize, what is your objectives and goals and what is the best instrument and best strategy to go about it. Just try to remove that emotion.
Yes, that is definitely a helpful tip.
Yeah.
Kind of like being at the poker table. If
Yeah. I mean, even for
you're too
myself,
steaming to sit still, it might be time to get up from the table.
I see when my clients are getting super excited and I go, oh, and then that's a red flag to me, right? And I see them, it's to the moon, and actually, to be honest with you, I use Twitter as a indicator. When I see everybody pumping and cheerleading on Twitter, or X, I should say, when I see everybody saying to the moon, to the moon, to the moon, I start managing my risk a little bit differently in those trades.
Yeah,
Um,
no,
so go
go
ahead.
ahead. Please, please.
Oh no, and then when it's and like when silver was at 23, nobody cared, nobody wanted. I was screaming and yelling, and nobody cared. And so when it's real quiet, if I can teach anything to the general public, is when that market's real quiet, that's the one you want to take a look at. And then when everyone's freaking, just like Tesla recently, was down in the sub 200 range, and they said it's going to nothing, and that was actually the time to buy. And then next thing you know, in the media, it's going to the moon when it was post 400, 500, and that's usually my indicator, like Kramer, the inverse Kramer situation. He posts 1,000 or 100,000 Bitcoin. He says, "Oh, everybody's got own Bitcoin." It's like, "Uh-oh, time to get out." And so just use the social media as an inverse indicator is what I could tell people.
Well, it's a great point, and I've thought about it in a slightly different terms. Where sometimes if I notice myself getting highly emotional about a position, if I can step back and observe that, and then maybe the other half of that is perhaps where you want to look, especially for those, and this is not in any way advice, but who have traded options on miners or bullion, get actually an inverse skew when those when you have that dollar update, man, those upside calls get jacked up pretty
Yep.
good. So anyway, we will leave that aside and try and steer people out of trouble today. Although,
Yep.
Drew, one of the few things before we wrap up that I wanted to ask you, before we start recording, you were mentioning some things of why silver has not gone back over $50, and thought that'd be interesting if you could share that again.
Yeah, so I got my start at Monex, one of the largest, if not the largest back then, bullion dealers in the country out of Newport. I worked there for just a little over a year, and this is just me speculating and guessing here, but their number one product was silver. When I worked on that floor, about 60 of us worked on that floor. Huge book over there, and they got a huge fine by the CFTC and got that book knocked out, the Atlas financing arm. I've always kind of scratched my head and wondered if that's correlated with the price of silver not getting over 50. And no one really talks about that. It's interesting, gold and silver bugs are so focused on other things, but they don't focus on the mechanics of the industry. And that's people like Monex getting knocked out. And not completely knocked out, but their financing Atlas arm knocked out. And that was a huge hit for the silver market, in my opinion. And I think that could be one of the reasons why silver hasn't gone over 50. But, that's just me speculating.
Well, I hear you, and Drew, I couldn't resist. You did mention the magic word in there, CFTC, and many who watch our show and remember my antics from 2021, which maybe some were the best, some perhaps not. Yet we did have news: Rostin Benham stepping down from the CFTC. So we're gonna
Yep.
have a new sheriff in town there. And
Yep.
we'll see how that goes. And Drew, I guess maybe that's the last one I'll leave you with. I had an
Okay.
interesting call with Rick Rule a couple of weeks ago. And I thought it was really interesting, especially because he was sitting there involved with PSLV when they were buying the silver back in 2021. He talked about how he cleaned out the inventory in multiple cities, and also that he does think that he said a matter of when rather than if, that we will have a day where the gap in how much paper is traded versus how much physical is out there. I thought, given his particular role in what he gets to see. That was an interesting comment. Do you
Mhm.
feel that way that we will see ultimately some sort of break in the paper physical spread there?
Not necessarily. I mean, we've been speculating on that for years and years and years. I will say, as far as the futures versus the spot, they're both disjointed, different markets at the end of the day. And quite, the spot market obviously tracks the futures for all the hedging books out there. So I really don't like to get into commenting on the disparities between like the spot, the physical, and the futures and the paper market, per se. But there's always, anything is possible, I guess, at the end of the day, and we'll just have to wait and see what happens. So,
Well, it makes sense. And fortunately, for people, especially that are looking to trade more actively, Drew, we do have you at ProGoldTrader.com, and perhaps you could just let people know about what you have going on at the site and how they can
yeah,
contact you.
I mean, effectively, I've got clients that just sit on it that don't trade. Instead of using a storage account, they're use a spot storage account. They're just with me, no leverage at all. They're just sitting on it, taking advantage of the cost effectiveness of a futures contract, and you can use it that way. And that's where a lot of people don't realize is you can alleviate a lot of those premium and spread charges that really do eat up a lot of accounts. And I don't care if it's 1.5% or 5%, those spread charges in those storage accounts will eat you up. In essence, that's why I started ProGoldTrader.com. And so if people want to go there, take a look. I've got a lot of education. And at the end of the day, I talk about this, your goal is not to inadvertently transfer your wealth to your spot dealer. And that's what most of these storage accounts are. And the alternative, the solution to that would be a futures trading account where you can use no leverage at all. I even have a questionnaire at the very bottom of my website, which is a little unique. That questionnaire is to make sure that every single person that even thinks about leverage or considers leverage understands it. It's at the very bottom, I think. Did it not? Yeah, so it's in
That
that.
one down there.
Yep.
Okay.
So my biggest thing is making sure people understand the risks and rewards and really get a true understanding of each client. So I made this questionnaire for a couple reasons. One, to make sure they understand what they're doing, understand what leverage is, that they can use no leverage at all, still take advantage of the cost effectiveness of using a futures contract. But saying that, there is leverage, there's options, there's risk management tools, there's a lot more flexibility and professionalism with a futures account, and a lot more consumer protections for that matter with a futures account. So I'm just trying to start the conversation of, leveling up everyone's professionalism and understanding of the markets, and really having honest conversations of what their goals are, and profession place each client accordingly to their risk parameters for who they are. So,
Well, I think that's really an important thing to have out there. Obviously, the futures are out there, and if people are trading them, any chance you can get good education and build your skill set, I always think is a great thing. And
yep,
fortunately, you're offering that, Drew, over at ProGoldTrader.com. Link
yep,
also in the description field below, as well as the link to your book,
yep,
which we will have down there. And Drew, I just thank you for making some time. It's a pleasure to finally meet you. I know we've been setting
yeah.
this one up for a while, but great to have you on here, and happy new year. And it'll be fun to follow along. I know you're on Twitter as well, and we will check in soon. We'll have to do this again.
Sounds good, Chris. Take care. Have a great day.
Well, thank you to Drew for today's show. Sure hope you enjoyed that at home, and nice to get a new perspective in some of these matters. And before we wrap up, would also like to thank First Majestic Silver, who kindly sponsored today's show. And as you probably heard, last year they did their deal to acquire Gatos Silver, and they are holding their special meeting of shareholders on January 14th. So just a week away, that'll be next Tuesday, to seek the approval of shareholders to issue the 190 million of common shares in connection with the transaction. So that vote is going on January 14th, and everything's still on track to complete the deal, which will certainly increase First Majestic Silver exposure. And just as a recap, we did talk with Keith last year after the deal, and to find out more about his thoughts on the transaction, well, that video is coming your way now.